Investors and traders, welcome to the channel Market Chart Pattern. Today is 29th of October 2023 and I hope everyone is having a great weekend. In this video segment, we are going to take a look at the key US tech stocks that we always do for this video segment. This video is for educational purposes only and it is not a financial advice. We are going to take a look at Tesla Motors. So what we are looking at is the daily chart of Tesla Motors. This is a stock that we have been following for a long time. We were able to actually call this 105 bottom. You can look at the old videos, and then we have also been able to call quite nicely some of the targets on the upside. Recently, what we were looking for was a pattern formation in which we had identified this bottom, which we labeled as the abandoned baby bottom, as a key pattern formation for us. There was a nice trend line. It was right around the 38.2% Fibonacci retracement, just below that, in fact. And then we also had some structural support coming on the left hand side, and the pattern did look good. However, after reaching the 78.6% Fibonacci retracement, the market has been selling off for the Tesla stock, and we have also seen sell pressure in the overall market, such as S&P 500, the Nasdaq 100, since July of this year. And this market has been rotating lower, and one of the key developments is that this low, the market has actually taken that out, not by a lot, but it did take it out on a few closing consecutive daily closing basis, and that changes a few things for us, which we will evaluate. However, the interesting thing to watch is this pattern formation, which we have the one-to-one price projection, which we like to label ABCD in marked in red. So ABCD, I have not labeled it, but this is what the one-to-one price projection is. It's a little bit lower, goes up to about $194 per share level. One of the interesting things is where the market is and where it is consolidating at the moment. It is right at the 50% of this entire move from January of 2023 to this high reached in July of 2023, and also it is 61.8% Fibonacci retracement of this point labeled as D here. These are in a narrow confluence zone, which is always a nice thing to look at when there is a confluence of one or more Fibonacci ratios coming together. And also we have the ABCD pattern formation quite near, which indicates that this region should act as a pretty good support. However, when we look at the momentum on the momentum basis on the daily chart, we see the price is below the 20-day moving average, which has been for quite some time, and also the price is just a little bit lower, below the 200-day moving average. So from a momentum perspective, maybe there's going to be some more grinding around here, some more consolidation. Maybe the price also moves a little bit lower and maybe come down to $194 per share level. And of course, we know what is going on geopolitically in the world, and there's a fair amount of stress in the markets at the moment. But given the fact that this stock was not able to take out the lows of the 23rd of October, which was the Monday of the last week, so within the whole week it has just been consolidating. That is something which we need to pay attention to. Now let's just move to the weekly chart. So here in the weekly chart, what I would like to point out is the price actually closed right just on the spot, where the 200 week moving average is. So we also have some support coming in from the long-term moving averages as well, and right into the zone of 50-day 50% retracement of these lows from here, which we discussed on the daily chart. And we also have this line which is a little bit lower, so there is a chance that we might actually get a pattern completion of around $194 per share level. However, we do have a confluence of a number of things coming together, and also the 200 week moving average. So this week, the coming week, is going to be really key. If the price just begins to consolidate here, there is going to be a good chance that actually this might be a pretty good support, and the price actually in fact maybe getting ready to move higher. This is what our opinion is so far. um, One of the things that has changed is that we were looking at this bottom, which was the abandoned baby bottom on the daily chart. Now we'll have to adjust it a little bit. We don't know exactly where the bottom is because we are waiting for the confirming price action, but assuming that this is a pretty good level to watch, if we just do our one-to-one ABC price projection, that still takes us to about $340 to $350 per share level. So given what is going around geopolitically, it might be a little bit difficult um, to basically assume that the market could in fact get there. But based on the price action and the key levels not being broken down yet, on the longer term charts, this is the position that in fact the market actually is a little bit stronger for Tesla stock, and we are looking for prices to move higher, or at least a pretty good support to come in over the next week. So this is what we are watching in the Tesla stock. So let's take a look at Apple. So this is the daily chart of Apple. So for the Apple, one of the key areas that we had been watching for quite a long time, um, at least about 6 weeks now, is this 160 to $163 per share level. That was just because of this one-to-one ABCD price projection coming around here, and also where the price is trading. There's a chance that it could actually go lower and get into this $160, $163 zone, which will also form a three drives to a bottom pattern formation, which is highlighted in pink. So this is what we are watching, and that in fact will be a pretty good support spot to in fact be able to have a low risk entry to the long side. Again, I'm not recommending anything. This video is for educational purposes only. But this is a pattern formation which could provide a low risk entry. Let's take a look at this on the weekly chart. So on the weekly chart, when this pattern formation was taking place, we had identified this level of about $200 per share level as a key level and a strong resistance level because of a confluence of a number of things coming together. So we had the 1.272 expansion of this entire range. We also had a 1.618 price projection here, and number of confluence of two ratios coming together is always something strong that we need to pay attention to. And we have seen the market in fact rotate lower. And what is something interesting to point out, in fact, in just the overall market selling in S&P 500, for example, and also Nasdaq, the market has been selling, but it has been an orderly sell-off. That is something, a key observation. And what we look at in Apple is something similar. So the market has just been correcting lower, and again it is coming down to the region that we are watching. So anywhere between 160 to $163 per share level is what we are watching for in this stock, which could provide a good entry to the well, it'll be a pretty good support level. Now let's take a look at Microsoft. So Microsoft stock is very interesting because it's also in fact a pretty strong stock. In fact, in my opinion, it appears to be the strongest of the stocks that we have looked at. The reason is because it was able to retrace down to about 38.2% Fibonacci retracement of this entire move higher, and it's just formed a double bottom formation. Now it's just consolidating. It's a range bound, but the stock does look strong, and this 38.2% Fibonacci retracement is pretty strong support so far. Let's take a look on the weekly chart. So on the weekly chart, what we can see is what the stock has done. It has gone and basically try to break out of the range. It's a pretty big massive range here, and when it tried to retrace, it was just able to retrace to about 38.2% Fibonacci retracement. It is just going sideways. However, if we were looking for some targets to the upside. This stock could in fact reach to about $386 per share level as a shorter term target, should the support of 38.2% Fibonacci retracement yeah, is not broken to the downside. Let's take a look at Amazon. So this Amazon stock, the earnings came out last week, and we have seen a jump or a gap in the stock price. The key thing about this Amazon stock is you can actually watch our older videos. It just likes to form double tops but double bottoms. I don't know why, but this is the pattern that we have observed, and this is what it has done again. So it has actually come, and you can see here, formed a double bottom formation along with several other pattern formations which we have discussed in detail in other older videos. And what it has done now is just went and actually tried to trade or take out the upper range out, found resistance, moved lower back into the range. So in fact this stock is range bound, but what we are watching for in the stock is that it might actually complete this ABCD pattern formation a little bit lower, and the chances of it coming to around $113 per share level, the chances are there it could actually in fact come a little bit lower to around $113 per share level. At that moment it would have completed a ABC one-to-one price projection, also at three drives to a bottom pattern formation, and then we'll have structural support coming on the left hand side around $113 per share level. Whether it's going to do that or not, I do not know, but we will be keeping a keen eye on the price action for the stock. While we are looking at Amazon, let's take a look at Shopify. So the Shopify stock, what it has done is it is really at a very key level at the moment where the price is. And the reason is that it has completed a one-to-one ABCD price projection. It is at the 50% retracement of this entire move higher. When it broke out of this channel, we knew that the characteristic of the pattern that had been taking the stock price higher had changed, and we were anticipating for a bigger correction, especially when the stock was not able to move higher than the 78.6% Fibonacci retracement, which acted as a pretty strong resistance. Now this level we are keeping a very close eye, because it could be a pretty strong support level, and that is something that we need to keep an eye on. So this is what we are watching in Shopify. Let's take a look at Netflix. So the Netflix stock came right into this zone, in fact went a little bit lower, but was not able to take out this 341 level that we had identified. And then I believe some earnings came out, and the next day the stock had a big jump. So where the stock is at the moment is around at the 61.8% Fibonacci retracement. It's finding some resistance here. Looks like the stock needs to digest some of the gains it has had gained recently in quite a short time, in fact. So there's a possibility it just moves lower. The momentum needs to improve, because the 20-day moving average is around here, so maybe it just pulls back right into it. So as long as this 38.2% Fibonacci retracement, in particular this 341.55 level holds, the chances for the stock to actually move higher and maybe make a move towards $500 remains on the cards. Okay, so let's take a look at now Google. So the Google stock is also very interesting. One of the things about the Google stock was once it had reached this 78.6% Fibonacci retracement, this is where it found some resistance, and there was just no consistent move higher. And then what we have seen is a move lower towards the 38.2% Fibonacci retracement. We have the 200-day moving average just below that. So there's a possibility the stock could in fact move a little bit lower, come down to around $118 or $119 per share level, which will be a 38.2% Fibonacci retracement, just around the 200-day moving average, and that should be a good support level around here. Then let's take a look at NVDA. So the NVIDIA stock, this stock is very interesting because it has moved a lot this year, and where it is finding resistance is right at the 1.618 expansion of this entire move lower, swing lower here, and that remains to be a key level where the stock is not able to take that high out, and that could be fine because look at just the gains. It needs to perhaps digest some gains. So there's a possibility if this low is taken out, this means that this range which has been in place for a couple of months, if it is able to break out of this range to the downside, and then what we are watching for is 38.2% Fibonacci retracement coming around $350 per share level, and we also have the rising 200-day moving average around here. So pretty much like Google stock, the chances for it to reach to about 38.2% retracement around 350 remains, and maybe in fact the stock might in fact be moving towards that target already. So this is what we are watching in the NVIDIA. Let's take a look at Roblox. So here we go. So the Roblox stock actually in fact is something, the stock which has been disappointing because it broke our pattern formation, but what we see is that it is recovering and in a sideways trading range for quite some time, but still what we could potentially see is a double bottom formation here. We're still waiting for confirmation, but just covering the Roblox stock here. Another stock that we were looking at was Symbiotic. Symbiotic is in the artificial intelligence robotics space. We had identified that the stock had retraced 38.2% Fibonacci retracement around the $30 mark. We had the rising 200-day moving average from a momentum perspective, and we were looking for a stock to rally, which in fact it did right up to the 50%, and here it has gone into resistance, and what we are looking at is that there is a retracement taking place. Now the key part for this retracement is that the stock should not really go below around $33-32 per share level on closing consecutive daily closes basis. If it does, then we'll be looking at a different pattern formation, and we could in fact see the stock move as low as $20 per share level. However, if the stock is able to hold support around this $32 mark, then we in fact could be seeing a one-to-one price projection, which could see the stock trade to about $50 to $52 per share level. So this is what we are watching for the artificial intelligence and robotics stock called Symbiotic. Now I will be doing a video on the stock indices, but something I wanted to point out, although there has been from a geopolitical perspective not great news coming out, and which has been impacting the marketplace for sure. Some of the things that I want to point out is that this is the chart of the Nasdaq 100, and what I would like to point out is that look what happened on last Friday. The last Friday was not able to take out the lows of the previous Thursday, and it's just moved into a key zone that we had been watching for. Although the news is pretty bearish in terms of the geopolitical scenario developing in the Middle East and perhaps elsewhere, but these from a technical perspective, these indices and also these key major tech stocks that we look at, a lot of them are actually in the areas or zones that could provide a pretty strong support in fact. So this is a very interesting observation which I will cover more in my video for the stock indices, so please stay tuned for that. Apologies, the video is getting a little bit longer, but we covered quite a lot of tech stocks which we were not able to cover for a couple of weeks, unfortunately due to my travel. So I'll try to do more videos about these now. Thank you very much for watching the video. If you think that from an educational perspective you like the video, please do click on the like button, and if you like the way we do the technical analysis using pattern recognition, Fibonacci retracements, price projections, extensions, expansions, to identify key price levels, then please do subscribe to the channel. And if you do, then please also hit that bell icon button, that way you will know when the new videos are posted. So thank you very much for watching. Good luck and have a great trading week ahead. Thank you. Bye.